for 37% or so of it of the sell-off back. Then we lost 2.5% last week, which was, given all the news, seems stable, seems somewhat stable. Now this would be just under 4% today, so that would put us back on track to be clawing back some of that, trying to get back to that 50% retracement of the break. I don't know what happens.
Exactly, yeah.
It's going to be a rough week. It's going to be a rough week, but then I don't know. There are glimmers in Europe, and maybe glimmers starting here of some type of light, maybe at the end of.
And clearly that's what the market is reacting to, trying to perhaps extrapolate some of that perceived improvement. And the tricky part, of course, is that the market is going to grab hold of that once it's a decisive, shift in the trend in terms of the virus. And it's also probably going to over-anticipate it a couple of times, or it's just going to be reacting to other things out there in the markets. Last week, though, to your point, the market, it kind of sagged lower by 2.5%, but it didn't really break down. And if you look at it, people are saying, volatility drained away to some degree. It seems as if it was kind of knocking around this narrower range, which on a net basis maybe wasn't so bad. Now, just for context, this rally that we're seeing in the pre-market would not quite get us back to where we were kind of at the top of that rebound rally moment, which was a week ago Thursday. It's like 26.30, 26.26, I think, on the S&P 500 was the close. So, it's still kicking around that range. And I think, Governor Cuomo's press conference yesterday where he detailed one symptom of cabin fever is mood swings. And I think that's what we have in these markets. You can say that March 23rd low is pretty plausible in pricing in whatever the heck a typical recession is in terms of earnings and all that, but the duration is a complete mystery, and the market is not using its typical signals of trying to price in what might be coming down the road in a few months. So I do think it's one of those, it makes sense that we should put some distance today between us and the lows, but it's not necessarily something that the market is as a high conviction as a durable trend. By the way, S&P has been trading so tightly in the past couple of weeks with the credit markets, with the high yield ETF, for example, just because I think the high yield market is a proxy for how long this lasts. That's what tells you exactly how much impairment of balance sheets is going to happen. You're going to miss maturity dates. You're going to have more defaults. Now, again, that being said, high yield market might already be pricing in a huge spike in defaults where it's trading just right now. So that's the tricky part is we've already priced in a bunch of pain. Is it enough?
Okay, Mike, thanks. That's all right. Yeah, that's the same place. That's the second place, right? Where you are right now? Or third?
Just relying on the kindness of strangers, as you know, Joe, always.
It's really nice. It's really, you pitch in with chores.
It's the first place, but also there was a place in between this one, too. Yeah.
All right. Thanks for playing along. Thank you. Thanks, Mike. Becky.
All right, now I have a picture of Mike in my head as Stella. Woo, relying on the kindness of strangers. Anyway, let's dig in a little deeper on what's been happening with the markets. Joining us right now for that is Mark Grant. He is Chief Global Market Strategist at B. Riley, FBR. And Mark, you've put out a pretty thoughtful piece this morning, kind of trying to fast forward and play ahead how this is going to change our economy. Before we get to that, let's just talk very quickly about the immediate. What Mike had been kind of referencing were these mood swings in the market. And I think you are of the opinion that there are going to be some much deeper issues that the market has to work its way through, that this is not going to be a quick rebound.
That's my viewpoint, Becky. I think we're in someplace between a recession and a depression by the time we get through all this. As Joe pointed out earlier, about 25% of the economy is shut down. That's accurate as far as I'm concerned, but you have to go a little further. There are businesses like the travel business, the hotel business, the restaurant business, and you can go on the shipping lines, the cruise lines, where there's likely to be a very large amount, meaning over 50% of bankruptcies and reorganizations that are facing us. The economy not only is down, but when we do start edging back up, it's not going to be at all like it was before. I can tell you, I spoke with the Department of Defense. They called me about some new initiatives they're thinking of. They wanted my opinion. And I was saying, for instance, the slogan has to change from "Make America Great Again" to "Make America Safe Again," and we can't rely upon these foreign countries for our medical supplies, for other essential things that the United States needs. We need to make them in America, buy them in America, and if they cost a little more, fine, they cost a little more, but we've got to be safe.
That's some major restructuring, and it makes sense what you're laying out. I would anticipate that there are calls from Congress for things like this, having seen some of the trouble we've gotten ourselves into with the supply chain being so disparate in so many industries that you would think would be essential to making sure America's safe. Let me ask you, though, I don't know if you heard our conversation earlier this morning with Dr. Scott Gottlieb. He was pointing out that this is probably going to be problematic for quite a bit longer than most people are anticipating it at this point. I think our kids have finally decided that they're probably not going to go back to school until June at the earliest, if that happens. But what happens in the fall if we don't have a cure for this yet, we don't have a vaccine for this yet, which would we continue to see these issues play out through the fall and next winter, where you have outbreaks again and where you have to shut down school, you have to shut down industries again? How does that kind of play out? Not to mention just how gun-shy Americans may be after living through this and not too eager to go back to some of the things that they used to do pre-crisis.
I did hear Dr. Gottlieb. I thought his comments were very thoughtful about the medical issues. But we have to separate. Obviously, people in their lives and their health come first. But you have to separate the medical outlook from the economic outlook and the market outlook. The outlook for the economy, in my opinion, is none too good. People aren't going to go back to work. It's not like all of a sudden we're going to say, okay, and it's going to be the same again. It's not going to be the same again. Because of the tremendous amount of bankruptcies in many industries and reorganizations, you're going to see people out of work for a lot longer. You're going to see an economy that's going to have to make not only a economic shift, but a psychological shift. As I said, my statement to the Department of Defense was, make America safe again. And that's what we've got to do, which is not only a medical comment, it's an economic comment, so that people can go back to work, stand on their own 2 feet, so that we have, industries that can rehire people. But if you look all across the board, even if you look at what's happening with the banks and some of the other major institutions, they're troubled and they're not going to come back anytime soon. And while the market from day to day, bounces one way or bounces another way because it's very erratic because of the medical situation, I think on a longer term that it's going to be much more problematic than most people or most institutions think to get back on our own feet and stand there independently.
So, Mark, if that's the case, and this is always the question that we never know, you can never call the bottom, it's always hard, but the question is, if you have cash on the sideline, are you supposed to put it in now, given how far we've gone already? Does it go that much more? Is that what you're arguing? And if it is going, if you have a conviction that it's going to get worse and not better, do you sell now? Which is almost an unheard of thing to suggest. But I ask the question because I think investors are trying to figure out, what they're supposed to do.
Andrew, you're a very thoughtful fellow. No, I don't think the answer is to sell now. I think what you have to consider is the timeline, which I've been writing about and out of the box, my commentary. The timeline is from here, which is today, to when we have some kind of medical resolution, and, which of course we don't focus on as much, when we have some kind of economic resolution. My viewpoint with institutions and the individual accounts that I do business with is the following. There's a timeline where you need X amount of cash. You need X amount of money. The problem with cash, I think it's not king, but I think it's the handmaiden to your income stream. So you need some cash so you make sure you don't get yourself in some trouble. But then I think over this timeline, this period of time, slowly, deliberately, nibbling, you put some money back in the stuff, especially in two ways. One, what's in your portfolio that you have a loss in that you can buy at a lower price, or if you own closed-end funds or mutual funds or ETFs, what can you buy at a lower price and get a higher yield if income is your necessity? And two, I think the key is then you look around and you see what industries, for instance, that don't have a lot of leverage, or companies that don't have a lot of leverage, that look at as good opportunities for the future, and you nibble slowly and you add to the portfolio. And I think that's the way to play it.
Mark, Mohammed had similar thoughts. We're going to have him on a little bit later. And there's kind of implicit in all these things are that we may get some kind of a break that we've seen in the stock market eventually that's similar to some of these other horrific breaks where we actually hit 50% down. Now, given the backdrop you just gave, it sounds like that wouldn't be out of the question for you. And since we're only down 27, going down another 20 should give people a sell signal if that's really what you believe. And same with Mohammed. I couldn't get him to say sell now either. He just says, oh yeah, it's going to grind lower, blah, blah, blah. It's going to do that. Should you sell? Well, no. So then you're having it both ways. Don't sell, but it's going to get much, much worse. Are we going down 50%? And if so, total, then save another 23%. Don't just sit there with your thumb up your nose. So say what you mean. Is it going down 50 or not?
Okay. One, I think Mohammed, I know him. He's a very bright guy. Two, I'll answer your question absolutely directly. No, I don't think we're going down 50%. Yes, I think that we're going to have some optimism. We could go down another 5 or 10%, and I think that's going to be about it. And the reason I say that is some industries are going to be incredibly impacted.
That would be to the lows we already hit.
Right.
Mark, that would just be a retest of the lows. Okay.
That's correct.
The scenario you painted sounded much, much worse.
No, I'm not painting a much, much worse. I'm just promoting. Okay. I'm just saying it's going to be some worse, and it's going to be far worse for some industries, Joe, and it's going to be not so worse and get better for others. I got it.
If we're going to
responded directly.
Yeah, if we're going to match some of the, all right, I'm going to get Mohammed later. If we're going down to, if we are going down 50, you should sell today. That's my only point.
I don't think we're going down 50.
We still are. Okay.
I don't.
All right. Okay, good. Good.
Fair?
I hope not.
I do think Mark thinks it's going to be a long time.
Yeah.
You wanted a square answer. We're not going down 50%. We're just going to be in a very different economic environment.
Right. You may need to sell those glasses
for joining.
eventually.
My pleasure, Becky. Always good to be on.
Good to see you. We'll talk to you soon. Andrew?
You too.
Okay. Great conversation. When we come back, futures sharply higher this morning. Take a look at some of the names in the Dow that are leading the way. And later, we're going to talk to Grubhub CEO Matt Maloney about how his company is trying to help restaurants in the midst of the coronavirus crisis and all of us get access to food. And a reminder, you can watch or listen to us live anytime on the CNBC app, especially if you're on the front lines and you're going somewhere. Take your phone with you. We're right back after this.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under the Your New Episode section. Happy listening.
Want to know a great way to discover the latest and greatest sports audio on TuneIn? It's easy. Just make sure push notifications are enabled on your phone to receive recommendations of sports talk radio and podcasts, along with important breaking news updates.
It's TuneIn Sports on this day. April 6, 1992, Duke's men's basketball beats Michigan 71-51. winning back-to-back titles for the Blue Devils.
Fired, and here comes Duke on the break. Behind the back, Hurley, the hill. Why not? That's the play that was available. Nobody back for Michigan because they're sending 5 to the board.
To listen to conversations breaking down the moments just like this, search sports to be part of the discussion on TuneIn.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, explore a sports documentary on TuneIn, like Sports Wars, telling the origin stories of classic rivalries, Raise Sports, about the concussion crisis that threatens football's future, and Dunkumentaries, a podcast devoted to the beauty and power of the slam dunk. For these and more, search sports documentaries on TuneIn.
This is Dr. Sanjay Gupta. Join me for CNN's new podcast, Coronavirus, Fact versus Fiction. We know you have questions, and we want to help you find answers. And send me your questions on social media at Dr. Sanjay Gupta.
Make sure to search and listen on TuneIn today.
Hey everyone, it's Tremaine Lee, MSNBC correspondent and host of the new podcast, Into America. In our latest episode, Republican giant and longtime Senator Lindsey Graham is for the first time ever facing a real challenge to his Senate seat. Can a relative newcomer to the scene, a black Democrat in a red state?
Welcome back to Squawk Box this morning. Let's bring you up to date on U.S. equity futures at this hour because we do have some good news. We have some green arrows for you. We've got 800. The Dow looks like it would open up 842 points higher. NASDAQ 311 points higher. S&P 500 looking to open close to 100 points higher. All of that on the back of some expectations about what may happen in the oil patch and the oil world, the price of oil. Meantime, we have some news just out. J.P. Morgan Chase's CEO, Jamie Dimon, just publishing his annual letter to shareholders. Not surprisingly, it deals heavily with how the bank is handling the coronavirus pandemic. The bank is offering a number of virus relief measures to customers, including grace periods for loan payments and the waiving of late fees. Jamie says that J.P. Morgan is ready to assist the government in implementing virus relief measures. The bank is giving employees an additional 5 days off, as well as paid medical leave for workers who aren't well. As for the economy, Dimon says he assumes the future will include a bad recession and that the bank's board would consider suspending the dividend under extremely adverse conditions. There's only one mention of his recent heart surgery. He thanks, it's in the last paragraph of the entire letter, he thanks all of those who sent him some well wishes, as we have. Also has some comments about this pandemic, says there should have been a playbook for the pandemic, but he says this shouldn't be about finger pointing, especially now, and quotes John F. Kennedy saying it's not what you can do for the country, it's or rather what the country can do for you, it's what you can do for the country. Joe, over to you.
Okay, Andrew, thanks. Coming up, could be another wild week for oil, starting out that way anyway. It was down earlier, but not quite as much now. It gained more than 40% last week, but compared to the way it dropped, these numbers we're getting used to them. Anyway, we're going to bring you the latest news on that situation, the war, the talks, the possible détente between Saudi Arabia and Russia. Halima Croft of RBC Capital will join us next. Stay with us.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, search sports documentaries on the TuneIn app.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
It's TuneIn Sports on this day. April 6, 1992, Duke's men's basketball beats Michigan 71-51, winning back-to-back titles for the Blue Devils.
Fired, and here comes Duke on the break. Behind the back, Hurley, the hill, why not? That's the play that was available. Nobody back for Michigan because they're sending 5 to the board.
To listen to conversations breaking down the moments just like this, search sports to be part of the discussion on TuneIn.
This is Dr. Sanjay Gupta. Join me for CNN's new podcast, Coronavirus, Fact versus Fiction. We know you have questions, and we want to help you find answers. And send me your questions on social media at Dr. Sanjay Gupta.
Make sure to search and listen on TuneIn today.
Hey everyone, it's Tremaine Lee, MSNBC correspondent and host of the new podcast, Into America. In our latest episode, Republican giant and longtime Senator Lindsey Graham is for the first time ever facing a real challenge to
TV.
Crude prices cutting some of their losses overnight, bouncing back from a loss of around 9% earlier in the session after the CEO of Russia's RDIF, a sovereign wealth fund, told CNBC that Moscow and Saudi Arabia were, in his words, very close to an oil deal. Joining us to talk about what could be coming, Halima Croft, RBC Capital Markets Managing Director, Global Head of Commodity Strategy, a CNBC contributor. So, Halima, what would this deal look like, and what is the probability? Would it be 10 million barrels a day? Does it? Do we need the United States to kick in, and will it be happening this week? Is it in everybody's best interest, or just too much bad blood between Russia and the Saudis?
I think it's going to be very hard to get to 10 million barrels a day without some U.S. contribution. With the Russians and Saudis and the rest of OPEC Plus, you could probably get 6 million. Hence why you have an effort to get not just the U.S., but Norway, Brazil, Canada, all on board for an agreement. But it's still going to be really challenging. I mean, there was a spat over the weekend between Saudi Arabia and Russia over who was targeting shale. There are issues about, do U.S. producers even want to contribute? Can they contribute because of U.S. antitrust laws? So it's still going to be really challenging to get this done on Thursday. You should note that the head of the Russian Direct Investment Fund, Kirill Dmitriev, he does have very good relations with Saudi Arabia. He's been sort of running the back channel between these two countries. But again, it's going to be really tough to get this done on Thursday.
Is there enough motivation in terms of stabilizing the price to where the revenue of Russia would, where you'd make up for the revenue you lost because of such low prices with, maybe higher prices, but you'd be cutting back on production. Is that going to motivate? Because no one's going to do anything that it's against their own self-interest. Or does Russia really want to strike a dagger in the heart of our producers here?
I think from the Russian perspective, they have a lower fiscal break even than many of the OPEC producers. But I think what they're looking for is obviously a higher price, but they don't want to do this alone. They're tired of bearing the burden of adjustment. They keep saying the high-cost producers, the U.S. should sit down some barrels. So I think what they're looking for is not just a U.S. contribution, but relief from sanctions. Russian energy companies have been sanctioned aggressively since 2014, and they're looking for some relief on those sanctions. So the question is, can we give the Russians enough to get them across the finish line?
And how about the Saudis?
The Saudis absolutely need higher oil prices. They have a fiscal break even of around $80 plus. They can borrow. It's more challenging for the Russians to borrow because they're under sanctions. But I think from the Saudi perspective, they're very clear. They're not going to do it unless the Russians are there. So you have to get the Russians on board for the Saudis. And again, the Russians want some U.S. participation and they want some sanctions relief. But now everybody in OPEC is saying the challenge is so big because of the demand problems, we need almost every producer there. Hence why they're going again to Norway, to Canada, to Brazil, to try to get everybody on board for some type of production cut agreement.
All right. And is it in the price already, some type of agreement, or do we go back into the 30s, do you think?
I mean, last week we had this amazing move anticipating an agreement. Again, 10 to 15 million barrels is going to be incredibly challenging to get that number done. If we don't get an agreement on Thursday, and then if the Saudis once again slash their official selling prices, we could be talking about being back in the teens pretty soon.
Oh, God. Okay. Thanks, Halima.
Thank you.
Stay in front of that camera. I saw you on earlier. Probably be on a little bit later, too.
Yeah.
All right, excellent.
All right, when we come back, the Treasury Department rolling out its small business loan program. We're going to talk to the president of the American Bankers Association about how it's going so far. That conversation is next. Plus, Grubhub CEO Matt Maloney is going to tell us how the virus outbreak is causing rapid changes in the food delivery industry and how Grubhub is trying to protect its workers. We'll be right back.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Want to know a great way to discover the latest and greatest sports audio on TuneIn? It's easy. Just make sure push notifications are enabled on your phone to receive recommendations of sports talk radio and podcasts, along with important breaking news updates.
It's TuneIn Sports on this day. April 6, 1992, Duke's men's basketball beats Michigan 71-51, winning back-to-back titles for the Blue Devils.
And here comes Duke on the break. Behind the back, Hurley, the hill. Why not? That's the play that was available. Nobody back for Michigan because they're sending 5 to the board.
To listen to conversations breaking down the moments just like this, search sports to be part of the discussion on TuneIn.
This is Dr. Sanjay Gupta. Join me for CNN's new podcast, Coronavirus, Fact versus Fiction. We know you have questions, and we want to help you find answers. And send me your questions on social media at Dr. Sanjay Gupta.
Make sure to search and listen on TuneIn today.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, explore a sports documentary on TuneIn, like Sports Wars, telling the origin stories of classic rivalries, Raise Sports, about the concussion crisis that threatens football's future, and Dunkumentaries, a podcast devoted to the beauty and power of the slam dunk. For these and more, search sports documentaries on TuneIn.
You love listening to ESPN Radio live on TuneIn, but did you know you can also listen to favorite ESPN shows on demand? Get the latest takes from Stephen A. Smith,
dynamic duos all over the place,
Dan LeBatard, and Garlic and Wingo when it fits
NBC app.
President Trump saying there are signs that the COVID-19 outbreak is leveling off. That has markets in rally mode this morning. And oil coming off its best week on record as one Russian insider telling CNBC Saudi Arabia and Russia that Saudi Arabia and Russia are very close to a deal. Plus, the government trying to get money into the hands of small business, but banks say they can't fully meet the demand. We're going to speak to the CEO of the American Bankers Association about the government stimulus bill and the state of the banks. The second hour of Squawk Box begins right now.
Good morning and welcome back to Squawk Box here on CNBC. I'm Joe Kernan along with Becky Quick and Andrew Ross Sorkin. U.S. equity futures at this hour, we've been between about 780 up and 900. We're back just under 800 or just over 800, given the last one that I saw. That would get back last week's sell-off, if you want to call it that. It was really sort of just a grind lower, down about 2.5%, and this would be up under 4%. We will see. Andrew.
Okay. JP Morgan's Chase's CEO, Jamie Dimon, out with his annual letter to shareholders this morning. We've been poring over it, as has Wilfred Frost, who joins us on the Newsline. Wilf, curious about your big takeaways. We talked earlier about his call that there likely is a recession, and also this other issue that he could see in a certain case that the dividend could be suspended. But I'm curious what your big takeaway was.
Yeah, absolutely, Andrew. I'm going to get to that point about the dividend and the buybacks. But the first big takeaway is that he came back to work just last week. This letter does typically come out around this time, of course, but I'm not sure exactly when he wrote it. On that note, it's usually about 50 pages long. This one is only 23 pages, still quite a lot to get through in a short space of time, of course. And near the top of the letter, he does address that. He says, quote, "In these annual letters, I usually cover a range of topics." He goes on to say, quote, "However, right now, as we deal with the spiraling effects of this pandemic, I want to focus on what we as a bank can do to remain strong, resilient, and well-positioned to support our colleagues, clients, customers, and communities across the globe." And guys, this very much is a 23-page letter focused on the current crisis more than anything else. And I get a sense, therefore, he did sort of want to get this out quickly since getting back to work. And I want to get to what you said and the numbers as it relates to this crisis. He says it will include a bad recession combined with some kind of financial stress similar to the global financial crisis of 2008. Our bank cannot be immune to the effects of this kind of stress. And I think that's what you picked up on, Andrew, as well, 10 or 15 minutes ago. Though on that note, again, sticking with the numbers and what this crisis really means to their bank, he talks about the severely adverse scenario that they test the bank under for the stress test each year, highlights how even during that they would still make money each quarter, and says that they've kind of amped it up to test themselves, and says, quote, "We have run an extremely adverse scenario that assumes an even deeper contraction of gross of GDP, down as much as 35% in the second quarter, lasting through to the end of the year. Even under this scenario, the company would still end the year with strong liquidity and a CET1 ratio of approximately 9.5%. So I guess this is the first time we've seen any kind of clear guidance on numbers based on a sort of 35% type full GDP that we may well experience now because of the pandemic. And that's quite interesting. Though he does say our bank cannot be immune from the effects, and it's possible, therefore, under that scenario, they would suspend the dividend, though not planning at the moment, as you said. Clearly, they have done with the buybacks. One quick final thing, I know we've got to run. There are many pages on this of the extraordinary lengths they're going to help their customers, to help their employees, and well worth a look at all of those. I think all the banks are doing similar stuff, and clearly those are the things that are important for others, even if we focus initially on the numbers as it relates to the bank itself.
Well, thank you very much, Wilfred Frost. The $350 billion payroll protection program that was launched Friday was in for a little bit of a bumpy ride for banks and the borrowers looking for relief. Despite 2,200 lenders on the SBA platform, very few loans were actually paid out in the very early stages, at least. And Kate Rogers joins us right now. She's got more on how the process is kind of playing out as we get a little deeper into this. Kate, good morning.
Hi, Becky. Good morning. From the information that's been made available to CNBC, we understand the process would work like this. Small business owners contact the bank that they currently have a relationship with and submit their PPP application from SBA.gov. Now, new applications were released late last week, which meant that some small businesses had to resubmit to their bank. The bank then verifies the information on the application and submits that form to the SBA. The SBA then gives each application an SBA loan number from the E-Trans system. With that loan number, which is sent back to the bank, the SBA says that banks have the delegated authority to make these loans. But according to industry sources, more information is needed. Many small businesses that we've heard from say that they have not received their funds, as they say their banks are awaiting guidance from the SBA. Now, as of Sunday evening, a senior administration official said that the SBA had given out 100,000 E-Tran loan numbers for a value of more than $30 billion. But right now, it's unclear how much of that $30 billion has actually made its way to Main Street lenders. They're supposed to take the next steps with depositing loans into small business owners' accounts. We did ask for a lump sum number, of actual loans that have made their way into the hands of small business owners, and that's information that we have not been able to get. We'll certainly keep you posted, but I can tell you a lot of small businesses that we're hearing from are very concerned about that $350 billion running out, because remember, this program is first come, first served. Back over to you.
Hey, real quick, just one question, because we keep hearing about it all weekend, and it looks like Bank of America has changed its policy. I'm curious what other banks you think have done the same. When the loan program first started on Friday, there were a number of banks, including Bank of America, who were not providing those loans to people who did not already have a loan with the bank. You could have had a checking account or some other kind of relationship with the bank, but they wouldn't necessarily give you the loan. Bank of America has switched. Have others as well?
Andrew, I think that's going to continue to be a case-by-case basis. We're hearing from a lot of small businesses that are working with community banks and haven't been running into those same issues. But again, a lot of the banks are saying that they're still awaiting guidance from the SBA. We asked the administration about that last night. We were told we can't comment on what the banks are looking for from the SBA here. So we don't quite have an answer here on the guidance that they may be waiting for. But I do think you're going to continue to see pushback like that, and that lenders may wind up changing their tune. Remember, there are 2,200 of them that are currently participating in the program, per the senior administration official.
All right, Kate, thank you very much. Kate Rogers. For more on the small business loans, let's bring in our guest. Rob Nichols is the president and CEO of the American Bankers Association, which is composed of all-size banks. The group is the voice of the $18 trillion banking industry. And Rob, it's good to see you today.
Good morning, Becky.
Let's talk a little bit about what you've seen so far. On Friday, there were a lot of complaints. I saw one story that was headlined, "Thousands of applications, zero loans." How has that played out over the weekend, and what do you think the state of the situation is going to be today?
So clearly there was a little bit of choppiness on Friday. We acknowledge that, and I think some of that has to be the result of the fact we're standing up this massive program, the scale of which we haven't seen. Kate's numbers that she just articulated were really important. Over 100 over the weekend. Considerable amount of work has been done here, Becky. A considerable amount of work. We were on with the Treasury and the SBA throughout the entire weekend, surfacing issues, making sure they understand what we're trying to get fixed. They're doing a great job admitting all of the challenge here. But listen, you have 100,000 loans that the SBA has processed in essentially one business day. That's remarkable. And then the $30 billion. That is essentially the amount of SBA lending that the SBA did in 2019 that they did in a day. So yes, there was a couple of choppy issues, but I'll tell you, lots of work has been getting done. There are, as Kate articulated, 2,200 lenders in the program. As of Friday, the SBA put out the new document to allow other banks, credit unions, and fintech companies to become certified PPP participants. So that number of lenders is going to grow considerably. And I would just say this, it's in our interest. Banks are doing everything they can to serve their customers, clients, and communities. It's critically important. And I would note that even before this program was put on the books, the banks have been doing that for weeks. And I know the Diamond Letter articulated that, but I'll tell you, community banks, mid-sized banks, and large globally active banks have been doing everything they can to ensure that the economic tail associated with this healthcare crisis is as minimal as we can make it. And the banks are in a strong position in terms of capital and liquidity to help right now and be part of the solution, and they're stepping up in incredible ways.
Rob, obviously this is kind of unprecedented to try and see a program like this pulled off. I can't imagine how many complications there are, how many difficulties there are in trying to pull it together. But at the same time, talking to small business owners here this weekend, for instance, the guy who owns the salon that I go to, he owns 3 salons. He has applied for 3 different loans, 2 through the SBA, 1 through the state of New Jersey. He said the process was pretty easy getting the applications in, but his bank, because you have to go to the bank that you already use as a customer, has not quite gotten the regulations in, and so he's still waiting. Says, he's kind of holding in there, but we've been under lockdown for, I think, 24 days now in the state of New Jersey. So he hasn't seen any new business come in over that period of time. He's got staff that he's concerned about, all kinds of other bills to pay. How quickly, in reality, do you think people are going to be seeing this money, and how quickly will the relief actually kick in?
I think you're going to see it happening very quickly, Becky. Of course, banks are floating this money. So when the borrower comes into the bank is floating the money, and we talk to bankers all weekend long at small, medium, and large banks who are processing the loans, putting money out the door critically into those hands of the small business women and men who, to your point, need it so badly. That's why the SBA is working with the banking sector to ramp this thing up so quickly and to get the $350 billion out the door into the hands of the small business women and men who, to your point, desperately need it. It's in our interest to get this program as quickly as we can, up and running as fast as we can. And again, you got to remember, we're just 72 hours in to a massive program. But I'll tell you, over the weekend, a lot of kinks were smoothed out, which is exciting. And I think you'll see that over the next couple of days, money getting into the hands of those small businesses.
Rob, we're out of time, so I need a quick answer. But what is the biggest concern from the banks? They are the ones fronting the money. They just want to make sure that they're going to get paid back and not get blamed for things?
No, certainly there's liability provisions. We want to make sure that we're not blamed for doing exactly what the government's doing. We're also around the KYC issues. We're working on that as well. But I will say the SBA Treasury throughout the entire weekend did a very good job answering all of these questions, many of these questions, so we can get this money quickly into the marketplace. That is the goal of the banks. They're doing everything they can to help their customers and clients right now. And so, again, lots of progress is being made. We have more to do, but this program is ramping up considerably, Becky, literally as we speak.
All right, Rob, thank you for your time. Rob Nichols. Joe?
Thanks, Beck. Coming up, Grubhub isn't just delivering 4 restaurants. It's also delivering 2 restaurants in the form of a donation. CEO Matt Maloney is going to join us after the break. First, though, check on the futures, which are kind of static, up about 800, just below that at this point. Squawk Box coming right back.
Don't forget to subscribe to our podcast. You'll get interviews, original content, and behind-the-scenes access. Look for us on Apple Podcasts or on your favorite podcast app. And subscribe to Squawk Pod today.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, search sports documentaries on the TuneIn app. Keep up with everything happening in the wild world of pro wrestling with the TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under the Your New Episode section. Happy listening.
Hey everyone, It's Tremaine Lee, MSNBC correspondent and host of the new podcast, Into America. In our latest episode, Republican giant and longtime Senator Lindsey Graham is for the first time ever facing a real challenge to his Senate seat. Can a relative newcomer to the scene, a black Democrat in a red state, win this fight? I head to South Carolina to find out. Search for Into America wherever you're listening right now and subscribe.
It's Tune In Sports on this day. April 6, 1992, Duke's men's basketball beats Michigan 71-51, winning back-to-back titles for the Blue Devils.
And here comes Duke on the break. Behind the back, Hurley, the hill, why not? That's the play that was available. Nobody back for Michigan because they're sending 5 to the board.
To listen to conversations breaking down the moments just like this, search sports to be part of the discussion on TuneIn.
This is Dr. Sanjay Gupta.
/TV. Welcome back to Squawk Box. Grubhub announcing it will donate $30 million of its own capital to 100,000 restaurants to help them during this time of crisis. That's about $250 to each restaurant. Joining us right now to talk about it is Matt Maloney, CEO of Grubhub. Good morning to you, Matt. How much of a difference is at this very moment $250 to a restaurant going to make?
Doesn't sound like a lot, but it's going to be a huge difference. We're looking at like a stimulus almost, because the way we're rolling it out is a consumer gets $10 if they spend $30. So our $30 million is going to transform into over $100 million of food sales to restaurants across the country. So that's a big slug when everyone, and I heard your last segment, everyone's working really hard to try to put money in the hands of small businesses.
What percentage of restaurants are still online and on board right now, and what percentage are off? And do you think you can even shift that or change that? Or do you think once you're off, you're off?
We're trying really hard. So it depends on the market. What we saw is in the early COVID West Coast markets, you'd see a dramatic dip in restaurants that went off the platform, and they're now starting to come back on. You have New York, Detroit that are in the throes of the crisis right now, and so they're peaking at about 30% of the restaurants are off. But remember, you're having thousands and thousands of restaurants coming on the platform for the first time. So we're seeing about the same number in terms of net, but it's just a transition.
And what's the experience of trying to onboard or even keep your delivery people working right now?
It's incredible. I mean, you hear everyone has these crisis stories. Our teams are working around the clock. We tripled our most onboarding month ever of restaurants. We had 15,000 restaurants go live in March, and we're probably going to do more in April. It's just an incredible intensity of need right now for restaurants. And so we're doing everything we can to help them. And with drivers, we launched contact-free pickup or drop-off. And we just launched last week curbside pickup for the drivers to make sure there's 2 layers of protection and no contact to make sure we help.
Hey, Matt, I got a bit of a tough question because I was looking online and saw some people talking about it. There were some drivers, and this is not just true of Grubhub, but across the board, who were saying, you know what, I actually don't make enough money doing this full time. I'm actually better on unemployment insurance right now, given what's taking place.
You know, there's plenty of work on Grub. I know there's lots of work on other delivery platforms as well. We have our own stimulus for our drivers. If they get impacted directly by COVID, we're paying them. I know other platforms are, and of course, the CARES Act just came through with a lot of relief for gig workers also. So I think that everyone right now is all hands on deck trying to help the restaurants, the drivers, everyone impacted through this economic and healthcare crisis.
Right. Hey, Matt, just think a little longer term out for all of us, because I think we're all trying to understand what the expectations are. I'm curious, inside the meetings that you're having, when you look at the other side of this, and the other side may be a month or two, depending on where you think about or how you think about this, there's other people who think that this is going to be a terrible restructuring, a bankruptcy situation that goes on for months and months, if not a year. Where are you on that in terms of what happens to the restaurant industry?
Wow, that's a big one. I am hoping for the best. I think that the fundamental economics of our society are still intact. I think that there is a lot of demand right now for restaurants. If we can help restaurants get through the next few weeks or months, depending on how bad this is, they will come back. They will be there for our communities. If they can't, then that's going to be a real problem. But as what we're seeing right now, once the crisis bottoms out in the market, growth does start to come back in that local area. But we're seeing is crises around the country in different markets at different times. And so we're trying to dynamically manage that situation on the ground.
Right. Okay. Matt, we wish you lots of luck. Stay healthy and safe out there. We appreciate you joining us as always, and look forward to talking to you again soon. Becky, over to you.
Thank you, Andrew.
Okay, thank you. When we come back, the mortgage market could be on the brink of collapse, with borrowers pouring into the government bailout claiming hardships. We have that story next. In the meantime, as we head to a break, let's take a look at this morning's pre-market winners and losers for the Dow. A lot more winners than losers today. We're up by almost 800 points right now. Stick around. You are watching Squawk Box on CNBC.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today. Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack